Okay, so this is day 2 of my recaps and journals, so we'll just get straight into it this time. Took a trade today. We had a 1 to 6 risk to reward, which is pretty good. I stick to my trading plan, stick to the rules, and it paid off. I almost didn't, I'll be honest. I remember, obviously, started looking at the charts at 9, and we didn't have anything for a while. Nothing that I really liked. I remember I thought, I had like two confluences on this move down. Not even with my strategy either, just confluences that could have made it work. And I didn't take it because I was really trying hard to stick to my rules, and it paid off, obviously. And yeah, that was that. And I was really like eager to take a trade. I was so eager to take a trade, and I didn't jump the gun. I really stopped myself from jumping and taking a trade. So I did well today in that. Even though I did take a trade, I still look back and think that was a good time to take a trade. Like, I wasn't trading with emotion, so that was very good. We'll analyze now why I took this trade. So if we'll start off on the hourly, or should we see? Let's start off on the hourly. So first things first, on the hourly, we have a bullish, not bearish. We have a bearish fair value gap here, which I've marked out with this purple box. And that's all we need to really know for that. Oh, sorry, we'll mark out these two. We have an hourly bullish fair value gap and a hourly bearish fair value gap up top. Okay, and then if we go to the 30-minute, we also have the bearish fair value gap up here. The bullish fair value gap has gone now. That was only on the hourly. This was only on the hourly. This is on the hour, 30-minute, and 15-minute in its own different ways. But I've only marked out the hourly because, that's going to have the strongest confluences because higher time frames hold higher power. So as we can see, price came down and perfectly tapped into this 1 hour bullish fair value gap. And as we can see, it also swept liquidity in the process of doing that because we had hourly liquidity, which I don't think I showed on the hourly. Yes, so see this wick here? If I hide it, how do I do that? There. See, we got this wick here. That obviously swept, this move down swept hourly liquidity there. And when we swept hourly liquidity and came into the bullish 1 hour fair value gap, that was pretty good confluences already. The price is going to go to the upside. And then price moved up, came out of the order block it created, also came out of equilibrium from the high to the low, and then came back in. And looking at it, I think I entered a bit too soon because price came into this, rejected off, and we had breaker structure to the upside on this candle here, and I entered then as this candle closed here. So then price instantly reverted back down, and then we had breaker structure here, and then it went up, and that would have been a better entry for FAR, as I would have had a better risk to reward as well. But thinking about it, I'm not sure how I would have known that. The only thing I could have done really was wait for the bodies of the candles to come in to this order block, because 5-minute time frame is still quite a low time frame. So just because we wicked in, that'd be a 1-minute re-entry, and we always want 5-minute retraces. So I think looking back, maybe wait for the candle body to come in. I'll remember that for next time just to get better execution. Yeah, I'll remember that for next time. So that's one thing I'll say is better execution on this trade. Even though it was a winning trade, still could have done better. One thing we've learned so far already is better execution. I'll remember that. Okay. So moving on. Price obviously retraced back in, went to the upside with breaker structure. I hadn't done off that because there's one confluence of liquidity sweep, second confluence of order block retracement, and third the confluence of equilibrium retracement. And then technically you could say a fourth confluence on why you think price is going to move in the general direction of the upside is because we reacted off of hourly bullish fair value gap. So they the two, well, four confluences we'll say the price is going to go to the upside. And price did, as you can see, after this second retracement back into the order block to fill more orders, price then moved to the upside. And I put my first TP1 here. So I'll walk you through what I was doing as this trade was playing out, because I was watching it the whole time. So we entered at 10:55, and I was watching this trade the whole time. And I remember as we got to here, and it started to play about a little bit, I think I moved then my stop loss. Oh no, I didn't. I moved it on this wick up. Yeah, I think I moved my stop loss to break even around as this candle was forming. I did after this, and we had that up candle a little bit, and then I think we did break structure to the upside. I know candle wasn't closed, so it doesn't really count, but I think I'm pretty sure as that was break structure, but as it was being formed, I moved my stop loss to break even. And then when we hit this area up here, like I said, I then decided to sell half of my position, which was I think $105. The half of the position was obviously still only risking 1% of the account in the trade, so risk management. But we sold half, and then price continued to group, and then I think when we broke structure to the upside and kind of came up to here, I decided, because I thought I put my original take profit on the bottom of this 1 hour bearish fair value gap, because I thought if price is going to react off it, it's going to, go in it. And I remember I thought I was being a bit too cautious, putting my take profit just underneath. I thought I said he's going to go into it. So I decided then to move my trade take profit to this draw on liquidity here. And that was going to be my final one. But as we can see, it didn't really hit either of them. But I got stopped out before that because I moved this and I was still a bit cautious, which maybe I shouldn't have been, but we'll analyze that in a minute. So because I was being cautious and moved my take profit, I didn't want to I still wanted to make as much money as I could have, obviously. So what I decided to do was trail my stop loss. And I remember I trailed it here, and then when we moved up here and then up here, I trailed it to here. And then I think when we got to right up on almost the peak, really, I think I was trailing it to about somewhere here. Oh, that was it. It was on the bodies of these here, on these two candles, like that. And I remember as this moved down, it wicked me out, as you can see here. So when that wicked me out, I think I had all my position out for, I think it was just I had $242 total for the day, which is, well, 1% of the account, really. Yeah, so we had 1% of the account profit today. 1 point, if we analyze what it would have been, like a 1.4 caller, roughly a 1.4 risk to reward, which isn't bad. But let's have a look then. Why price? Because even if I had my original take profit, which was, I remember, just under like that, why didn't price hit my take profit? Because we can see it didn't even react to this bearish fair value gap. And obviously it's not going to come back up, it's going straight back down. So why? The only thing I could think of is liquidity. The price didn't even hit that liquidity. It would have took out that liquidity, but if it took out that, we draw the high to the low. It's an order block. Price would have just come back in. But yeah. Sorry, I'm just analysing it. Let me think out loud. Because we would have just barely tapped out of the order block and came back into firm orders, but it would have swept that again. So see, it did sweep that liquidity there. It swept previous liquidity. Well, it swept the previous high, sorry. Price would have then obviously created the order block, which would have been the low to the high. Price would have come back in, fill orders, break structure to the downside, enter for short, and he would be going down. But yeah, weird why this decided to stop it, because I don't think there was any imbalances anywhere. Not an imbalance here. Not an imbalance on the 30-minute either. Any hourly imbalances? Not an hourly imbalance either. 4 hour? No, we're not going to have any 4 hour imbalances, obviously, but yeah. That's one thing I am stumped on, and I have to try to think of that myself. But to save this video dragging out too long, overall good trade. I think the notes, mental notes I'll carry into my future of trading is, I can't remember what it was now. What did I just say in the beginning of the video? Yes, better execution. Wait for the bodies of the candles to come into the actual order block rather than the wicks, especially if we're on the 15-minute time frame and we know the 5-minute would have wicked into, that's fine. But I think when we were on the 5-minute looking at wicks, that's like 1 minute in, that's like a 1 minute retracement. So we're not gonna do that, because I remember I have tried and back tested 1 minute retracements, and that doesn't really have as higher confluences as you'd expect, really, as the 5-minute or higher. That's for what works for me. But yeah, maybe we'll back test if we need to wait for the 5-minute bodies to come in before entering, just to get better execution and try to become as close to perfect as we can. Yeah, there's nothing else. I'll analyze this on how I could have had better. See, that would have hit, if I was just a little bit lower, that would have hit my take profit. I think it would have, I think it basically did wick in, especially if I didn't draw it perfectly. Like maybe if we really analysed it like that, it would have, yeah, it would have just wicked in, wouldn't it? Yeah, okay, we're going to go with it did wick in. We are going to go with it. But overall, pretty good trade. I mean, you know, I knew where price wanted to go. So we'll take that as a win. Notes taken for next time though. And yeah, we'll leave it as a short video. So see you tomorrow.